Hello traders and welcome to another video review. Today is Friday, November 17th, 2023. Let's find out what is going on the Forex economic calendar today. We got some data scheduled for release from the UK. Let me find out whether this data had been published, because it's already after 8 o'clock. So we got the data from the UK. Maybe they were published already, so we know for sure. Yes, the core retail sales were worse than expected, minus 0.1 versus the forecast 0.4, and the other core retail sales were minus 2.4% versus minus 1.5%, so the deterioration deepens. Retail sales minus 2.7% versus the forecast of minus 1.5%. All of this data are very bad in form of the core retail sales and retail sales from the UK. We will definitely take a look at the British pound. 8:10 we got the German Buba, the Balz, to give a speech, and then at 11 o'clock you got one of the most important event of the day, CPI data from the Euro zone. The market participants expect the CPI to drop from 4.3% to 2.9%. At 2 o'clock we got the German Buba president Joachim Nagel to give a speech, and 30 minutes later we got the other very important event of the day, building permits from the US together with the housing stats. At the same time we got the foreign securities purchases and LMPI data from Canada, and then FOMC member Daly will give a speech at 4 o'clock. At 5:30 we got Atlanta Fed. And at the end of the day we got US Barker Hughes oil rig count for all of you crude oil traders. So this is how it looks like for today. The CPI data are the key event for the London session. Nevertheless, let's start with the British pound, and let's see what is the situation on the 4-hour chart of the cable. This is the 4-hour chart of the cable. As you can see, the market reaction is to the downside. So what's happened recently is very clear. We got the bounce from the 38% of the Fibonacci retracement around here. So the level of, let me just take the horizontal line. So this level here, 1.2375, is the intraday technical support, and the level of 1.2454 is the intraday technical resistance. Right now the reaction is to the downside because the data are way lower than expected. We should test the intraday technical support, and then in that situation the next target would be the level of 1.2335, which is the technical support. Let's find out where is the retracement based right now. So this is the low, let's say, this is the high for the Fibonacci's, and yeah, just a little bit lower. So 50% is located just around here. So 50% is 1.2346, just above the technical support, and 61% is located at 1.2307. So those two levels might be tested soon as the movement to the downside deteriorates even lower. Of course, we still have the 200 periods moving average on a 4-hour chart located at 1.2292. The momentum is already at the neutral level of 50, so any violation of the intraday technical support and extension of the drop towards 50% of the Fibonacci retracement would likely means that the momentum break below the level of 50 and enter the negative territory. There's plenty of room to the downside to continue the correction. There's plenty of room to the downside for the price as well. So it looks like we are having the wave C of the correction. So if we apply our Elliott wave correction pattern, it should look like this. We got the wave A completed, wave B is here, maybe wave C to the downside is right now in progress. what is going on the euro dollar. The situation on the euro dollar is quite similar. However, as you can see, we've been the boost has been rejected from the recent swing high. We've made a local marginally new swing high. Nevertheless, we can surely place the level of 1.0888 the horizontal line there, because this is still a technical resistance, and there is still this area where the very important retracement and the technical resistance are placed, and the market is still not going to is not able to break any of these levels. Right now we are testing the 50 periods moving average. It looks like the reaction is negative, so we will see the test of 1.0832 today, possibly. If we zoom out, we can clearly see that the market still has plenty of the room to the downside, because the nearest technical support is seen at 1.0768, and there's plenty of the room to the downside. There is still plenty of the room to the downside on the RSI. However, this market is still positive. This indicator is still positive. It's above the level of 50, so the market could resume the up move anytime soon. Okay, let's now find out what is going on the crude oil. And as you can see, there is a very interesting situation here, because on a 4-hour chart we have a breakout to the downside. The upside was apparently rejected. The local eventual high was made during the pullback was made at 79.97. And since then the market has been seen moving lower towards extremely oversold market conditions, and the last push below the technical support at 73.83, was completely violated with a new low at 72.16. Those technical supports that were broken are very, very important, because those was they were the lows from the 2023 middle of the July. So right now the next target for the market is located roughly around the level of, let me just take a look, it's supposed to be 72.65. There is some kind of a technical support. However, if you see this situation on the crude oil, you might be 100% sure that we just are testing the technical support level. We even marginally cross it lower with the low 72.16, which is 6 pips lower, but because the market conditions are extremely oversold, there is some chance for a bounce. So let's just change this color of the broken technical support. Now it is a resistance, so there is a chance for kind of a retracement to the upside to test this technical resistances from below, but then most likely the down move will be continued, because the bearish pressure is still very, very strong. The key level, and to be honest, the key area for bears is the supply area. This supply area is located, of course, between those levels here, and as long as this supply area is not clearly violated, the outlook remains bearish, because only with the violation of this area the outlook might be something better than it is right now. So please just remind me, this area 77.36, 79.69, very wide area compared to the general situation on the crude oil. But if we just switch to the daily time frame chart, you can see that this was the area of the potential interest for the boost, and now it's clearly violated, tested, and then extension to the downside has happened. When we break below 72.16 for good, the next very important technical support is located at around the level of $67 per barrel of oil. So this is still the movement that needs to be done in order to extend this down move. Nevertheless, on the daily time frame chart, the market conditions are extremely oversold again. So the chances for this market to bounce towards one of the technical resistance are really hard. So if we switch back on the 4-hour chart, it's very clear that the levels we should pay attention to these days are simply the level of 73.86 and 75.02, because those two levels might be tested soon, both on 4-hour and daily time frame chart. One more market that we will cover this time is maybe SP 500. We didn't look at this recently. Before the Friday close, we can see very nice movement to the upside. We traced most of this recent correction from the lows of I think it's 4,000 and something, 4,101. This is the key technical support, and of course the key technical resistance is this yearly high 4,612. In the meantime, we got some other technical resistances. The recent one has been might be tested very soon, 4,539. So very nice bounce from the lows in an impulsive manner. So we should see some sort of the pullback lower. The pullback might be completed and terminated around the level of 4,394, and then the up move should resume. Moreover, the strength of this movement can be even seen here. There you go, because we got the breakout above the short-term trend line resistance as well. This is short-term. I mean, the high was made at the end of the July, so this is at least 3 hour long. Sorry, 4 months long trend line. So it's like a mid-term. It's not only the short-term, but it's already the mid-term trend line. It was violated. Market hit the extremely overbought conditions, so there is not too much room to the upside, but there is some kind of a room for a pullback. As you can see, we didn't break below the level of 50 during the last pullback. The same kind of a price action is expected now, and then of course the uptrend should be resumed. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.